Hello and welcome to a CMS Forex Daily Video Recap. I'm your fundamental market analyst, Nick Nassar. Today is Tuesday, August 31st, 2010. Let's start by taking a look and following up on the dollar-yen pair, which had a very sharp move in yesterday's session. In today's session, we saw the yen shrugging off more tough talk from Japan's top finance official as traders appeared increasingly assured that authorities wouldn't act to back up implied threats to stem the currency's rise. We followed up yesterday's move to break the 85 level, pushing below 84 in the middle of New York trading. We tested the 84 level overnight, rebounded, but then fell again at around 11 a.m. after the European fixing. The finance minister, Noda, said that the recent uptrend in the Japan yen was worrying, and quote, "As I've been saying, my fundamental stance is that excessive fluctuation or disorderly movements in exchange rates have a negative effect on the stability of economies and financial markets. Based on this stance, we will monitor the market with great interest, and we will take decisive steps when that becomes necessary. We'll see if those threats actually come through to pass or not. For now, we target the 83.60 level, which was our low from last week, and a 15-year low for the pair." Taking a look at some U.S. data, we saw the prices of single-family homes in 20 major U.S. cities rise by a seasonally unadjusted 1% in June compared to May, and 4.2% from year-earlier levels. The 10-city index rose 5%. Prices were up also 4.4% during the second quarter. While the numbers are upbeat, other more recent data on home sales and mortgages point to fewer gains ahead. A second report from the Institute for Supply Management Chicago said its business barometer fell to 56.7 in August from 62.3 in July. The headline index shows 11 straight months of economic expansion as it remains above the 50 level, but the economy is growing at a slower than desired pace. It is also the weakest reading in about 8 months for the index. In a third release, we got some positive news in that confidence among U.S. consumers rose more than forecast in August, a sign that the biggest part of the economy may avoid a slowdown that would derail the recovery. The Conference Board's confidence index increased to 53.5 from a 5-month low of 51 in July. The median forecast had been for a much smaller gain to 50.7. More confidence may help ease concerns that consumer spending, which accounts for about 70% of the economy, will falter. The news helped U.S. stocks to rally from opening in the red, and stocks as of 11:15 a.m. New York time were trading in the green, though barely. While the present situation declined in the index, we did see future expectations jump by about 5 points. Today's reading stems a 3-month slide in the index that we could see from the chart, as we had declined both in June and July following high readings earlier in the spring. Turning back to our market highlights, it's interesting that the euro was strong today, as even though we saw a continuation of the main theme from yesterday in most of our other pairs. Some end of the month flows may be at play here, as we saw the euro rally around 100 pips after testing the 1.2625 level, a 78.6% retracement of the rally we had seen during last week. We reached the level around 1.2740, tagged it, and then fell back down in New York trading. Now that 127.40 level was our support back here on August 15th before we broke below during the August 21st session. So we'll have to monitor if this was just a reaction to the sharp slide we saw yesterday, and if we see continued down movement during the rest of this week. A lot of that will ride on how the manufacturing data that's due to come out the middle of the week and the U.S. non-farm payroll report comes out the end of the week, and how traders respond to those important releases. Part of the reason for the strong euro rally may have been due to the rise that we see here in the euro-pound pair. We broke out of this consolidation pattern throughout most of late August and rallied very sharply, reaching the 0.8290 level by the middle of New York trading. There wasn't much from the fundamental side to cause this move, which makes it seem that end-of-month flows may be to blame here. If we see this move retrace in tomorrow's session, then we will have a confirmation of that, but if we continue, then it'll be important to monitor this new move, as it does break a downward sloping resistance trend line in this pair, as we can see here. Taking a look at the data from Europe, we had Germany's Federal Labor Office say that the seasonally adjusted number of unemployed workers fell for a 14th consecutive month by 17,000 in August, while the unemployment rate was unchanged at 7.6%. While the decline in the number of jobless was below expectations, the data still shows a labor market that is improving as strong exports help to boost German economic activity. Still, the rebound in Germany may now continue at a slower pace than perhaps forecast before. Separately, the European Union Statistics Agency Eurostat said the Eurozone unemployment rate stood at 10% in July, unchanged from the previous month and in line with forecasts. Also, August consumer price inflation in the Eurozone slowed to 1.6% annualized pace in August from 1.7% in July, that being the preliminary figure. There was a report also saying that the ECB may delay its exit strategy and have at least one more 3-month refi operation with full allotment, essentially lending any bank all they want at a fixed 1%. That knocked what risk sentiment we had following the US consumer confidence release. While the euro may have been strong against the pound and dollar, we did see it sliding against the Swiss franc. Here we're looking at the euro-Swiss franc pair, and we see that we broke a level of support we had set up last week at around the 1.2970 level, which was the all-time low for this pair. So we pushed below that, setting a fresh all-time low now at 1.2877 as of around noon New York time. This shows that investors are seeking safer assets compared to the euro, but the franc also got a boost as a gauge of local consumption reached a 2-year high. To that extent, the data from Switzerland has been pretty good recently, and therefore diminishing the risk of deflation in the country, and therefore the central bank may be comfortable to let the currency appreciate as long as it's not too rapid. Taking a look at the US dollar Swiss franc pair, here too we see it breaking below recent support at a 1.0220 level and pushing to a fresh low at 1.0135. If we zoom out to a daily view of this pair, we see that that is the lowest that this pair has been since the beginning of this year. And if we do follow that with a break of the 1.0150 level, our next level of support may be the parity level at 1. Switching from our safe haven currency to take a look at currency pairs most closely tied to risk sentiment. Taking a look at the US dollar Canadian dollar first, we see that it moved towards the 1.0660 level, as we had mentioned was possible in yesterday's video if we continued the theme of risk aversion, which we did in today's trading. So we could see that that level had been tested twice last week, and our rally today did stall at that level. Same can be said of the Australian dollar US dollar pair, which extended its decline from yesterday's session, testing the 0.8850 level or just above that, which we have been mentioning is a very important level, switching between resistance and support from July to August. And now it is again acting as support for this pair. So we did see a bit of a bounce following that, but however the overall theme this week is of risk aversion and of US dollar gains against its higher yielding rivals. Taking a look at our final pair, the pound dollar, and it too is sensitive to risk sentiment. And yesterday we had seen the pair falling, and today, following UK traders coming back from a bank holiday, we see it breaking below the 1.5450 level, declining rather sharply down to 1.5320, so setting about a new 1-month low for the pair. If it continues to decline, then we could see the next level of support being the 1.5250 level, an area of resistance in the beginning of July that was broken. So we'll see now if it turns to support this week. So I did mention we have some important data coming up, and tonight we're going to see manufacturing PMI from China, both the official and the HSBC versions, as well as manufacturing and GDP data from Australia. So if Chinese manufacturing is strong, then we could see risk appetite, but if it's weak, then we could see continuation of risk aversion. Overnight, Germany will release its retail sales, and then we get the final version of the Eurozone manufacturing PMI as well as UK manufacturing PMI. Tomorrow in the US, we start with the ADP employment change, which is a measure of private payrolls, which is expected to show a rather small 20,000 increase. That's followed by the US ISM manufacturing PMI as well as construction spending, and throughout the day we will get figures on vehicle sales ending at around 4 p.m. So how manufacturing around the world did during August will play a key role in currency movements in tomorrow's trading session. And with that, I'll wrap up today's daily video recap. For more news, videos, and analysis, please visit our site, cmsforex.com. I want to thank you for watching and wish you good trading.